Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Wednesday, the 13th of November, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. Going to go for our usual regular run through in here today. Take a look at what we've had, what we've got coming up. Take a look at the macro fundamental data, the various macroeconomics and fundamentals, central bank events. We'll take a look at some charts as well, geopolitics, what's going on in markets right here, right now, and take a look at some of the charts levels that potentially we're going to be looking at. Let's kick off in here with the calendar in here. All eyes now on the main data of the week. Market's been fairly quiet this week. We had a slight dip yesterday, quiet Monday, slight dip yesterday, but nothing really significant, and then a dip and a slight rebound as well. And then markets slightly, very slightly lower again this morning, but above the major indices, above yesterday's lows. But all eyes on CPI. Now, remember, CPI is one of our tier one pieces of data here at Trade Day that you cannot trade over. No trading 2 minutes before, 2 minutes after the CPI release, which comes out in just under 1 hour. So just under 1 hour, we have the CPI report, and so no trading 2 minutes before or after that, and no orders in the order book either. No orders in the order book, no open positions 2 minutes before or after the CPI data out in just under 1 hour. We also get Kashkari speaking at basically bang on the same time, and Williams also speaking at 9:30 Eastern. So watching out for those two as well. Fed speakers are going to be super important. Remember, the Fed, a little bit, we don't really know where we are with the Fed. You know, how many more rate cuts to come? You know, are they going to go on pause at any point? They're very much going to be reactive to the data. CPI data is going to be important today. Remember as well, the CPI data, we're expecting potentially a slight uptick in the headline number in here. You see 2.6 compared to 2.4. The CPI 0.2 is expected. Core numbers, pretty much the expectations around in line with last time. So we're not looking for it to go any lower. If anything, a slight uptick on some of the numbers in here. So you need to be wary of that, right? So we are expecting the number to be slightly worse than prior number, but the longer term trend obviously continues to be down. So yeah, Fed speaker is going to be completely important today. Kashkari, whatever he has to say, he's speaking at the same time as the numbers come out. He may get asked a question. He might be told what the numbers are and asked a question, so he could be reactive. He's slightly more on the hawkish side, and then Williams as well speaking today. So we're keeping an eye on those certainly today to give us a clue where the Fed might be going down the line. We've kind of given up a little bit on the earnings side. We're kind of out of earnings season now. We do get Cisco today. That could have a slight impact. Walt Disney tomorrow. Going into next week, some of the retailers, Walmart and Lowe's, are out. But the really big one is now next Wednesday, a week today, NVIDIA. The last of the Magnificent Seven. They always report, significantly later than everyone else. Is actually going to be beyond halfway into the fourth quarter when they're reporting their Q3 results. But that's going to be a really big one for maybe setting the tone for late November. So we're going to be certainly keeping an eye on that. Geopolitics continues to be front and center in here at the moment. So we've had Elon Musk and Vivek Ramaswamy in here, been put into these new roles. And the Doji, convenient for Trump, Department of Government Efficiency to try to dismantle government bureaucracy in the US and find savings there. So that has happened in here, been announced overnight. Republican senators choose a new leader today. Mitch McConnell has been in charge for how long? 18 years. So it's going to be interesting. I mean, the establishment favourites come from Texas and South Dakota, but we do have and whether there'll be a check on the president-elect in here, but he's obviously looking out for Florida's Rick Scott, who is a MAGA enthusiast. But at the moment, the front runners are John Conwin, I think that is, and South Dakota's John Thune. So we'll be keeping an eye on that as well, because that could be where we get some kind of check on on Trump for his presidency or not, as the case may be. Bitcoin slightly pulling back. All eyes really on the US inflation report, as we've spoken about in here already. That's the big focus for the day, but also those Fed speakers. So going into today, just a quick look at what, headlines are fairly boring, really, to be quite honest. Futures slightly down, yesterday slightly down. Await inflation data for clues on Fed's path. I've already spoken about that. That's going to be critical, and how the Fed speakers react to that over the next today and then over the next few days once we have the CPI data in here. If the tab will let me allow to move on. Morning bid, all eyes on CPI. Same thing out of Reuters in here. Stocks, what's we got in here? Stock markets slightly lower as inflation concerns mount. Consumer pricing is going to rise in here, but and pricing in about 2 rate cuts through June. We've been talking about that pausing potentially by the end of Q1. We've already been looking at that as we've been looking at the Fed Watch tool and seeing the trough in rates, only 2 rate cuts away as we go through into the second quarter. US CPI to show another firm reading, leaving Fed path up in the air. So this is it's really important. Not only is this CPI data super important, markets can really move on this, guys. So you really need to be watching once we get out that 2-minute window. There's going to be some opportunities potentially today, because I think it really will have a significant impact on where the Fed go next. The next couple of CPI numbers. Dollar scales of 6-month peaks as dollar stays strong in here going forward with the Trump trade. And if we go scan around global markets in here, Nikkei's notably down here today, 1.6%, with the Hang Seng little change. European exchanges are little changed. And here we have a slight dip across the board, with US futures also dipping lower. So the FTSE, the UK FTSE, the German DAX, and the French CAC all around 0.1 to 0.2% lower. So a slight dip in here this morning. And it's a similar story for the futures overnight in here. 0.25% on the S&P and Dow, and the Nasdaq nearly 0.25% on the S&P and Nasdaq, and about coming up to 0.3 on the Dow. As we said in here, looking at the CME Fed Watch tool, certainly looking for another rate cut, but it's only a 62% chance of a rate cut at the next meeting in December. And if we skip out to total of 3 meetings out, 19th of March, we're only pricing in now. Look, 450 to 475 is where we are. This is actually this is switched over now, so that this was bigger before. So this is 2 rate cuts, but by March now we're that's fading, and the chances are bigger chance that we're going to get only 1 rate cut between now and the end of the first quarter. And if we, as that article said, if we skip out to June now, there's the trough in peaks. So that's from here. That's 2 rate cuts by June now, and then that's it. The market's not pricing in. I think if we go further out, 400, 425 is the peak. So the market's pricing in another 2 rate cuts, with rates settling at the 4 to 425, 4.0 to 4.25 level as we go into the summer. So and so it depends where we go with obviously inflation. Inflation continues to fall in here. If the economy starts to look a little bit wobbly, then the chances are that we'll get the chances of bigger rate cuts increasing. On our outlook in here on the Treasury market, whilst we're on the interest rates, we did see a back up to higher prices, lower yields through last week, but a plunge back down lower to lower prices, higher yields across the yield curve in here. And that's of this, and you look at the 2-year in here, going to lower prices, higher yields. This here is the anticipation of a less dovish Fed and fewer rate cuts. The 2-year going to still lower prices. That's higher yields, remember, on the 2-year. Equity markets, though, don't seem too worried about this kind of fading chances of more aggressive rate cuts in here, and stay pretty much on their highs. We have had a slightly more negative S&P. It doesn't really do it justice on this chart. We'll move across to the trade rate charts in a minute. But the underlying, we still, this is a pause. Right? We've had a huge rally and we're going into a huge piece of data. Is it a surprise that over the last couple of days, the market's kind of gone nowhere, slightly down? No. Is that a surprise? No. Is it damaging the uptrend? No. Is the outlook still bullish? Yes. But it's all going to be about the CPI today. If you see the ES in here, slightly more damaging, but it's a long way from any kind of support levels in here, and looking very, very firm. Dipped and rebounded yesterday, dipped this morning, and already rebounding in here. And the Nasdaq, it technically actually looks more resilient. We made a new high back on Monday. Yesterday, dip and a strong rebound, almost back to unchanged. and dipping and rebounding slightly in here this morning. So slightly positive, I would still say, even though we've gone down, even though we've had this sort of slow tracking down, the market's not really giving up any kind of real significant support in here. And it doesn't take much for it to break back higher and look bullish again. And that's on the NASDAQ, and on the ES is a similar story. Just kind of chopping lower lows and lower highs in here. Did just dip into this little support area here. That's holding above that little swing low there on the S&P. That's down at 59.85 We've rebounded off of that. So the underlying theme in here, this potential is a topping pattern, but I think it really needs to cut below that 59.85 level. And while it's above there, this still looks bullish and can easily turn upwards. Obviously, CPI is going to be critical today, and then watching out for Fed speakers today and going forward. We get Powell tomorrow as well, remember. So, yeah, all eyes going to be on that as well. Yeah, watching out today for that CPI data. So, helmets and goggles, they're ready for that, guys. Take care, stay safe. We'll be back with you with another bull versus bear webinar and pick the bones out of the CPI data tomorrow. Bye.